Morning, everyone. I used the wrong camera today. This one's like a super close up. I didn't want to do that, but here we are. I don't know how to fix it. I don't know how to change it. But good morning, everyone. Hope everyone's doing well today. And we are into the end of the quarter. So today is the final day of Q2 and the final day of June. I can't believe June is over, right? We're going into July. There's not too much time left. So we'll see. Today's the end of the quarter. There's a lot of news that made headlines. The end of the quarter after yesterday they confirmed, I think it was like negative 1.6% growth in Q1 GDP, and we're probably going to get a negative quarter. We're probably going to see that number a little more solidified in July, and then the confirmation is in September. But things are looking pretty shaky, pretty rocky so far in terms of the first and second quarter. Now the second quarter is about to close on a downturn, right? We are very close to the bottoms, but there is some kind of silver lining in this based on what I've seen at least. And that being that into the end of the quarter, typically we see a rebalance, right? We see a rebalance on fund manager books, on different things, right? Just asset managers in general. And that rebalance, right, especially in a condition like this, could play out something like a sell-off, right? To kind of get rid of things that maybe haven't been doing so well and then pick them up if they like those names at a lower price. So they look better on the book, right? The average price looks a little better on the book. So there could be some decent selling followed by a end of week rally into this quarter end, right? We could see some rallying into the end of the day based on a lot of bidding. I saw some decent bidding over the last 2 days, like moderate bidding. Over the last 2 days, especially yesterday, they're trying to hold it out. And even if it's the end of the quarter and we're down here pre-market, that bidding was in specific names, right? Yesterday, we saw Apple did extremely well, Amazon, Microsoft, Google, right? The main tech names that have been seen as on sale or cheaper, right? Something like that. So we could see something like that shape up into the end of the quarter, right? We'll see a little more of a sell-off and then a rebalance based on those books that could present a bit. Now, I am under the impression that we do get a more significant relief rally into the summer. I think the summer lows are pretty much short-term priced in around that 36.50. I don't think we get too much lower than 36.50 this summer, right? And then get a little slow grind to the upside, and then we'll see what happens from there into the fall. But again, that's about like 2 months left, 2.5 months left. So we could be in for some sideways / upward momentum here to press things a little higher before we do see new lows, right? There has been a lot of talks about a softer landing, especially Powell. He spoke yesterday about something like that. There's a possibility of a softer landing, although it may be harder. I don't know. I think it's just like political nonsense that they're just saying things so they don't really scare things too aggressively, if you will. But in like if we talk about like the Fed and the ECB and all that stuff, we have the ECB forum as well. They're going to be obviously ECB and the Fed has been under scrutiny about all these rate hikes, right? They've been talking like constantly, it would seem, right? The Federal Reserve and the ECB. So the real question that they've been asking is like, is this economy strong enough to deal with these rate hikes, right? How is the economy going to deal with these rate hikes? And Powell was asked that at the ECB forum yesterday, right? As inflation risk continued to mount across the globe. Other central bankers also attended the annual forum. It was in Portugal, and here's what some of them had to say, right? The main ones that I'm going to be looking at are Fed Powell, obviously, and Lagarde. So Powell said, there's a quote, "We are raising interest rates, and the aim of that is to slow growth down so that supply will have a chance to catch up. We hope that growth could still remain positive, but if you look at strength of the economy, households are in a very strong financial shape," right? They've still got a lot of excess savings from forced saving of not being able to travel and things like that, and fiscal transfers. The same thing is true with businesses, very low rates of default and a lot of cash on the balance sheet. The labor market is in also tremendously strong, still averaging high job growth per month. Overall, the U.S. economy is positioned to withstand tighter monetary policy, we think. So it's an interesting thing that he says, because if you look at the underlying numbers in Q1, right, growth has drastically slowed in those specific sectors that he's been talking about. Now, the thing with inflation is that even if you're not spending money on traveling, right? You're spending a lot more money on other things as wages don't grow necessarily with those, right? Inflation, like the cost of like groceries goes up 30-40%, right? Like the cost of gas goes up significantly. Those are things that you don't think you're spending a lot of that much more money on because they're more frequent and they're smaller amounts, but they add up, right? And the thing that could happen in this scenario when rates go up, right, and inflation's still sticky to the upside is that the consumer is going to get effed, if you know what I mean, right? Like the consumer is going to continuously spend. Credit card debt has risen to crazy levels. Mortgage rates are, I think, like 20-year highs or something. I can't remember the exact number, 15-year, whatever it is. But the reality of it is like the consumer is going to feel this, and this situation is not going to play out as Powell mentioned in this specific statement here. Lagarde also says, I don't think we are going back to that environment of low inflation. So a little more honest, if you will. There are forces that have been unleashed and that we are facing now that are going to change the picture and the landscape within which we operate. So certainly in this part of the world, the energy shock that we suffered and are suffering and will continue to suffer has a major impact. And I think this is not specific to Europe, but this is certainly a dependency of European countries and the euro area to external supply for foes. So it makes like I agree more with Lagarde saying, right, we also saw that blip in the Italian bond market. Obviously, that there's a lot more tail risk. There's a reinvestment risk. There's obviously tail risk in the US, but the reinvestment risk is a little more pronounced in the ECB at this moment. And those things, right, they're not just going to stay in Europe, right? It's going to spread throughout. And I think she's taking a more realistic approach to all of this. Um, with that, right, today we have, I think, like some PCE inflation data. It's not going to, let me just check. We got initial jobless claims that came out. Chicago PMI. Oh, we got the Fed balance sheet at the end of the day. I don't see that PCE number. Maybe I was making things up. But regardless, we got the end of the quarter. A lot of crypto. So this is a stat that I got from one of our members this morning. Let me read it. Let me read it before I mess it up. More than 80,000 Bitcoin holders have seen their millionaire status revoked as the market turmoil continues in the second half of 2022 as crypto and Bitcoin dump, right? Bitcoin down under 20,000 for the first time in a very long time, right? This sector has been extremely rocky, and it's shown its correlation with the overall market, right? And I think like maybe potential leader in economic standards and also market standards as well, right? Crypto has been taking a beat down. And I don't think the lows are over, right? I think like Bitcoin could even see under 10K at some point if we get this pronounced overall equity crash as well. So that's something to consider as well. This is like crypto is just getting destroyed. We've seen that. Sorry, I gotta read this. Coinbase and BlockFi have said that they would slash their workforce by a fifth, so that's a huge amount. And then MicroStrategies, right? Michael Saylor, who scooped up another 480 bitcoins for 10 million, despite undergoing massive unrealized losses. So they're going to get margin called at some point right here. There's also growing concerns over the industry, even prompted that the SEC to deny an application to convert the Grayscale Bitcoin Trust, which has 13 billion of assets under management, into the first spot ETF. So there's still a lot of concerns in that area, and I think crypto is going to be an interesting thing to watch over the next like few weeks, next few months, even to see what kind of potential stability can come out of this market through that crypto movement, right? So we have let me just check like Ether. Like there's these levels that I'm looking at right now, like Ether USD, for example, like in and around like the 900 mark down to like 700. I think that could be some point of stabilization, but there's still, I think, a little more pronounced downside in this, which could bring a lot more downside in the overall equity market. I don't think that that's over, but in the summer we'll see. I think we're at temporary lows here in the US market and can see the same in crypto. We just got to watch those correlations because they've been very interesting over the past few weeks, I should say. So again, like I was mentioning at the beginning of this video, enough of my rambling here. We got that end of quarter today, right? End of month, end of quarter rebalance. And this is going to be important because it's a big quarter. It's like the first quarter was a big quarter. This is a big quarter. Every quarter this year is going to be a big quarter because this quarter, a lot of tech names, they said that they're already pulling back on their forward guidance, right? They're pulling back on the forward guidance, expecting not to have earnings growth like they have seen recently. They're expecting to see slowdowns in growth, right? Supply chain issues, all that stuff. And the inflation fears, right? There have been talks about cutting workforces in massive companies. There have been talks about freezing hiring as well. And those things are going to be presented to us in July. That's when those earnings reports come out. So that's going to be very interesting. Now, a lot of those expectations did pull down the market in the past recent weeks. So there could be a different reaction in the market when they actually come out in July. But the thing with that is when the quarter ends like this, right? When the quarter ends poorly, we'll see today because it's not over yet. You typically have multiple quarters of the same thing that is pronounced that will continue. I see a potential little rally into some points in the summer. I don't know how far we get, but we'll see what the bid is like today. The point is, be diligent. Today and into the end of the week, it's going to be I think, choppy, kind of messy, and it's going to be both directions. There's going to be rebalancing, which is probably going to sell off initially, maybe rallying to the close. And remember, it's going to be a long weekend. Not that you guys give a shit, but Canada Day is on Friday, and then July 4th on Monday, where the markets are closed. So that's probably what you're going to care about. So let's open up the trading rooms here, futures and options, and we'll see you guys in there. Happy trading. Hope everyone does well today. Trade smaller, trade more diligent, and just keep in mind what the overall situation is in this market so you don't over trade or over speculate anything. So we'll see you guys tomorrow and enjoy the weekend if you're off.